Good afternoon, ladies and gentlemen. It's certainly a great pleasure to have the opportunity to speak to you today at this splendid conference. The subject of our session today is an important one, and I commend the organisers for recognising that. The not-for-profit sector relies on third-party funding. Trust and confidence in the sector is critical, and high-quality financial reporting is a key source of that trust and confidence. The United Kingdom has a well-established regime for reporting by charities and other NPOs, non-for-profit organisations, and I hope to be able to share some UK perspectives with you during the panel session. But during this short presentation, I'm going to focus on an important wider debate about the prospects for international accounting convergence in this context. And in doing so, I will draw on a groundbreaking study recently commissioned by the UK accountancy profession. Next slide, please. The not-for-profit sector, however you define it, is of substantial and growing economic significance in both developed and developing countries. In the UK alone, that is England, Wales, Northern Ireland, and yes, still Scotland too, it was estimated in 2010 that the sector encompassed 870,000 entities, contributing around $116 billion to the UK economy, and that's around 186 billion US dollars. Data for 2014 shows that the 165,000 registered charities in England and Wales alone accounted for gross total income of no less than £63 billion. That's around $100 billion. Although, as we will see during this session, the sector itself is highly diverse, the accounting challenges it faces arguably are not. Yet when compared to the commercial and public sector worlds, the attention paid to global convergence of NPO financial reporting seems surprisingly modest. So why in the UK at least is there renewed interest in the potential for international convergence in this context? Well, a number of factors, I think. More charities and other non-governmental organisations are working across borders, with grants from governments funding relief and development activities. Private donors and major foundations have tended to adopt a more international approach to their work. Yet charities and other organisations need to navigate a bewildering variety of international grant regimes and are not helped in this by the notable absence in this sector of agreed global norms for financial reporting. These sorts of factors meant that exactly 3 years ago, when responding to the IASB's consultation on its future agenda, ICAEW first suggested that the time might be right for the IFRS Foundation to contemplate extending its remit. And we're not alone in thinking that maybe something needs to change. In 2013, an umbrella group of 5 UK and Irish accounting institutes, known collectively as the CCAB, got together to commission from academics a study entitled, perhaps optimistically, International Financial Reporting in the Not-for-Profit Sector. The academic team was asked to explore the current accounting landscape inhabited by NPOs and to assess the case for the development of some form of international accounting product, a new framework, guidance, or standard for the sector. The rigorous 130-page study that was published earlier this year had 2 main components: a review and analysis of existing literature on the topic, and a detailed online survey seeking views from stakeholders around the world with experience of NPO financial reporting. The study is available for download, and I think it is well worth a read. So, what did the authors find? Perhaps most significantly, clear support, over 71%, for some form of international solution to diversity in the sector's financial reporting. A striking result, even though I'm sure there's a need to unpack exactly what respondents meant by standards in this context. The 71% includes the high proportion, 38%, who agreed strongly with the proposition, and rises, for example, to 82% for contributors based in African countries. Some other key findings: a similarly high proportion thought that a converged standard or standards should be followed by entities in the sector, and that donors and funders would value accounts prepared in accordance with such standards. Only 1 in 4 thought that local organisations would be reluctant to follow such standards on the assumption that they were produced by a reputable international body. Encouragingly, too, there was an exceptionally strong congruence of views around the world on what the objectives of not-for-profit accounting should be, including transparency, stewardship, and comparability, both within countries and more widely. Moving on, the survey also confirmed that national laws and national gaps are at present the most common basis for MPO financial reporting, with some use made of IFRS, the IFRS for SMEs, and less so IPSAS. But there were widespread concerns about some aspects of national accounting regimes. Indeed, high majorities thought that it would be beneficial to have international guidance on non-exchange transactions, 82%, fund accounting, 80%, related party transactions, 78%, and so on. And around 1/3 suggested that all MPOs should follow any new international standard, although some may have had in mind cash accounting in this context, or something less than a full mandatory standard. So, some consensus, at least, about the attractions, the potential benefits of an international initiative. Improved comparability and accounting practice, acting perhaps as a catalyst for a more consistent approach by major donors to funding applications, saving costs and efforts for would-be recipients. 2 weeks ago, ICAW published a very extensive study of the economic impact of the EU's decision some 10 years ago to adopt international standards of accounting for the private sector. The assessment is broadly favourable. Indeed, the evidence of IFRS application by business indicates that as more and more countries adopt common accounting standards, substantial, wide-ranging benefits can follow. An inclusive platform for sharing ideas and concerns, global collaboration between international and national standard setters and regulators, standardization of training for finance professionals, a pooling of resources and a sharing of skills and experience internationally, more widely understood financial reports, and so on. And there are signs that adoption of a brand new reporting regime can even be a catalyst for reform and renewal within organisations beyond merely the content of their financial reports. All of these ideas warrant further research, but the survey did elicit detailed responses from over 600 individuals with direct experience in NPO, financial and non-financial reporting, practitioners, trustees, users and regulators. They were based in a wide variety of countries from all regions of the world, 20% of them involved with organisations in more than one country. Their answers to the questions posed were often accompanied by narrative comments, weaving a rich tapestry of insights into local regimes, practices, and concerns. They encompassed both accruals and cash-based accounting and reflected the highly diverse nature of existing financial reporting frameworks. The literature review was equally extensive, covering almost 140 research papers and reports and publications by standard setters, regulators, and others. Its detailed results were critical for shaping the online survey and for putting the survey findings into perspective. The review focuses on material illuminating three key aspects of not-for-profit financial reporting. Firstly, on what defines the sector and the role of reporting and accountability. Secondly, on the globalization of financial reporting in the sector and more generally. And thirdly, on the various accounting issues of particular significance to NPOs. It then goes on to utilize the literature to present a series of illuminating country case studies, analyzing the current reporting frameworks of the 9 jurisdictions shown. That analysis underscores the diversity of relevant national law and regulation, but it also highlights the considerable importance now attached by many jurisdictions to improving the effectiveness of the regulatory and reporting frameworks applicable to their not-for-profit sectors. Inevitably, the results of both the literature review and the online survey draw attention to the many questions and challenges any move towards convergence might entail. Questions about the nature, status, and scope of any new international product and how it would mesh with national laws and regulations. Would it be a full standard or something less prescriptive, some form of recommended or voluntary international framework or guidance? Determining if it was accruals-based, whether it should apply to small organisations, such as the 80% of UK-registered charities that currently produce cash-based receipts and payments accounts. Crucially, on the approach to developing the new product, who would take this on? Questions of governance, stakeholder engagement, and of course funding, a major challenge for all international standard setters. The important question of the adequacy of the skills and capacity of the profession and other local institutions would no doubt loom large, and there is a risk that international guidance might as a result not be widely adopted by local jurisdictions. And even if it is adopted, a risk that major donors might not readily accept that the resultant financial reports better meet their information needs. So much to analyse, research and debate, including perhaps in the context of the next ISB's consultation on its future agenda. So to conclude, there is evidence of a remarkable level of interest internationally in doing something to address the current diversity in financial reporting by not-for-profit organisations. Some first steps have been taken, and they show, unsurprisingly, that the challenges to progress are quite remarkable. But there is a compelling case, I think, for seeking in the months ahead to build on the momentum achieved so far and to invigorate this important debate in the interest of NPOs themselves, the users of their accounts, and ultimately those who benefit from their activities around the world. Ladies and gentlemen, my contact details are on the slide, and I'd be delighted to hear from you about the study or about the current UK regime, and many thanks for your attention today.